Welcome back to Investing Talk Podcast.
Today we're looking at Cambium Networks, ticker CMBM. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. We have a genuinely fascinating conflict here with Cambium.
Right.
We're looking at a stock that, it just saw this spectacular, almost unprecedented spike, purely based on a technological breakthrough, it seems. But at the same time, its underlying financials are just, well, they're screaming warnings.
Okay.
So the core question for you, the listener, the investor, is pretty simple. How much is that tech potential actually worth when the company is losing massive amounts of cash?
And facing regulatory threats, right? That's the other piece.
Exactly. Imminent regulatory threats. It's turned into this classic battleground, momentum traders versus the fundamental analysts.
Yeah, you can see the camps forming already. So we're going to unpack the rocket fuel, as you said, check the engine's integrity, I suppose, and figure out what management really has to prove. Soon.
Very soon. And we absolutely have to start with the catalyst, the huge news that hit October 29th, 2025.
The Starlink news.
The Starlink news. Cambium announced this strategic integration with the SpaceX Starlink satellite solution. And look, this wasn't just a minor note.
Yeah.
This felt like a potential game changer because it immediately differentiated Cambium in what's, let's be honest, a pretty crowded market.
Okay, so when you say differentiated, what does that integration actually let them do? What's the practical effect?
Well, it lets them offer what's called multi-one connectivity. So basically, they're leveraging the high speed of Starlink, combining it with their existing wired and wireless systems.
Right, their bread and butter.
Their bread and butter, exactly, to provide better security, better remote management. And they're really targeting enterprise clients. Think big businesses, utilities, maybe school districts.
Especially in remote areas.
Especially in remote areas that desperately need reliable connections.
Yeah.
Places where fiber just isn't feasible.
And the market reaction? Well, positive doesn't quite cover it, does it?
Not even close. It was euphoric. Earlier that day, the stock was, around $2.95?
Yeah, something like that.
And it surged.
Yeah.
Intraday high of $6.69.
That's just an explosive move. A 377% spike in, hours.
That surge is the core insight here, I think.
Oh, wow.
It wasn't a slow buildup. It was a pure, instantaneous re-rating of the company.
Based purely on potential.
Purely on future potential.
Yeah.
The market priced in years of successful Starlink integration, right then and there, completely divorced from the fundamental reality, at least for that moment.
And the technicals backed up that frenzy, didn't they? The volume.
Oh, the volume was astronomical. 115 million shares traded that day. Compare that to their 3-month average, about 253,000 shares a day.
Wow. So yeah, every retail trader, every momentum algorithm just piled in.
Absolutely. And if you look at the charts, the technical indicators, key signals confirmed it. The stock jumped way above its 50-day and 200-day moving averages.
Which is usually a pretty strong bullish sign, right? Shows momentum.
A very strong sign of established upward momentum, typically.
Yeah.
And on top of that, the MCD crossed bullishly back in October.
Right. For listeners maybe not glued to charts, that MACD cross basically means short-term momentum is accelerating past the long-term trend. So it confirms the spike wasn't just a blip. There was real buying conviction.
Exactly. Now, what gives Cambium a legitimate niche here, if we set aside the hype for a second?
If we can,
is their existing one network platform. It acts as a sort of, modest moat. It simplifies IT complexity.
Because managing all those different connections, wired, wireless, fiber, now satellite, that's a headache for IT departments.
That's a huge headache. Cambium's platform unifies the management, the security. It makes adding something like Starlink relatively painless, and that's very attractive to those corporate buyers.
Okay, so the tech sounds valuable. The market obviously thinks it's a huge deal. What did the professional analysts say after the news broke? Did they jump on board?
Well, the short-term sentiment is definitely one of extreme volatility. You saw that retail interest driving implied volatility through the roof.
Sure.
But when the analysts updated their notes post-news, they generally rated it a buy. But here's the kicker. Look at the consensus high-end 12-month price target.
Okay.
$3.
Wait, hang on. The stock spiked to almost $7, $6.69, and the analyst high-end target is $3.
Exactly. That gap right there is probably the clearest evidence you'll find of this conflict we're talking about.
Between hype and reality.
Totally. Analysts are working off conservative financial models, probably looking at the debt, the losses, whereas the market, driven by pure momentum and frankly, SpaceX excitement, is somewhere else entirely.
That $3 target basically confirms that fundamentally, even with the good news, they still see it as a distressed company needing a major turnaround.
Precisely. Which brings us to that structural problem. We've talked about the rocket fuel, the Starlink deal, but now we need to look at the ship itself. Does it sound?
How can a company with this potentially game-changing partnership still be seen as fundamentally distressed? Let's dig into that.
Yeah, and this is where, caution becomes really important. If you look at the actual financials, they're weak, plain and simple.
Okay.
Revenue for the trailing 12 months, this is as of Q3 2025, was only about $172 million.
And the trend?
That's the critical part. That figure was down a steep 20% year over year.
20% down. Ouch. If demand for connectivity is supposedly so high, I mean, that's the whole point of Starlink. Why is their core revenue shrinking like that?
Well, the sources suggest it's likely a mix of macro headwinds and maybe a lag in converting their older product pipeline, before all this recent news.
Okay, but whatever the cause, the effect is.
The consequences are severe. They're deeply unprofitable. Net income is negative $98 million.
$98 million loss on $172 million revenue.
Yeah. Put it this way, they're essentially losing 57 cents for every dollar of revenue they bring in.
Yeah.
That's not sustainable.
No. That kind of negative margin means they must be burning through cash incredibly quickly.
Incredibly quickly. And it's made worse by a really stressed balance sheet. Our sources point to a high debt load that, quote, substantially overshadows equities.
So high debt, big losses, shrinking revenue. That's kind of a trifecta of financial distress.
It's a triple threat that, a single partnership announcement, however exciting, just can't fix on its own.
And we absolutely cannot ignore the regulatory risk they were facing literally just days before the Starlink news hit.
Right. This is the ticking clock element. On October 10th, the company got that Nasdaq staff determination letter.
Which means?
It means they failed to meet the minimum bid price requirement, keeping the stock above $1.
And if they don't fix that?
Ultimately, it leads to delisting, which is just catastrophic for investor confidence, for liquidity.
Yeah.
It's bad news.
So that massive price spike, jumping from below $1 eventually up to $2.95 before the surge, it wasn't just good news for shareholders, it was like a temporary stay of execution from Nasdaq.
That's a good way to put it. The stock price jumped well over the minimum requirement, sure, but the regulatory process doesn't just vanish instantly.
They're still being watched.
They're still being monitored closely. So the risk hasn't disappeared. It's just been sort of overshadowed by the Starlink excitement for now.
And you add that regulatory pressure to the organizational questions. Didn't their CFO leave recently?
Yes, the CFO announced their departure back in September 2025. So yeah, you combine all that, the financials, the Nasdaq letter, the executive change, you realize management is under immense pressure right now.
Which definitely raises the execution risk question. I mean, can this management team, the same team that oversaw the slide towards potential delisting, can they actually pull off this massive turnaround needed?
Can they convert the Starlink buzz into actual sustained profitable contracts?
Yeah.
That execution risk is probably the biggest factor here. They have a compelling story now, technologically, but they have got to prove they can manage the financial side.
They need margin improvement, bottom line results. Or else
they could easily slide back into that negative spiral no matter how great the Starlink partnership looks on paper.
Okay, so we've laid out the risks pretty clearly. Let's pivot back, though, to the positive momentum, because there are things coming up that could shift the narrative again.
Right. There are definitely potential catalysts on the horizon. And the first, maybe the most critical date, is November 4th, 2025.
Q3 earnings.
Q3 earnings release.
Yeah.
Investors are going to be hanging on every word. They'll want two things, mainly. One, real quantifiable updates on the Starlink partnership. Are there signed deals? What's the pipeline look like?
And two,
management's concrete plan for dealing with the Nasdaq situation. They need to provide absolute clarity on how they'll maintain the listing. No more ambiguity.
Okay. And beyond the Starlink story, are there other signs of life? Anything happening in their core business?
Actually, yes. And that's important. Independent of the satellite deal, they did report some positive signs internally. New orders were up sequentially, about 6% in Q2.
Okay.
And distributor sell-through, basically products moving off distributor shelves, saw a 17% sequential increase. That suggests maybe inventory issues are clearing up, and there's some underlying demand stabilizing.
And wasn't there something about Wi-Fi 7?
Yes. That's where the organic growth story gets interesting. They seem to be seeing really strong growth in their Wi-Fi 7 product line, up 75% year over year in the first half of 25 compared to the back half of 24.
75% growth in a new tech cycle, that's significant.
It is. And they launched 2 new Wi-Fi 7 access points in September. So that's real operational momentum separate from the whole satellite narrative.
Right, which could be important if the Starlink hype fades a bit.
Exactly. And if you connect that product traction to the more speculative side, well, the potential upside gets even bigger. There are unconfirmed rumors floating around. You see them on social media, some financial chatter about maybe a deeper partnership with SpaceX, possibly even involving government or defense contracts.
Ah, okay. That would massively expand their market beyond just commercial enterprise.
But
highly speculative at this point.
highly speculative, absolutely. Just chatter right now. There's also talk about potential M&A, a possible takeover.
Makes sense. Depressed valuation fundamentally, but with high traction in Wi-Fi 7 and now this shiny Starlink deal, maybe they look like a target.
Could be a vulnerable target for private equity or maybe a larger competitor. Something to keep an eye on.
And zooming out, the long-term picture, the global push for better broadband, especially in rural areas, that hasn't gone away, right?
And not at all. That creates huge multi-year tailwinds. And it's still a big if. Cambium can successfully leverage these satellite relationships to really penetrate those underserved markets.
Right.
Think Africa, Latin America, Asia Pacific.
Places where satellite makes the most sense.
Exactly. Then their growth runway could actually be extremely long.
Okay, so wrapping this up, we're left with this real tension. These two opposing forces. You've got the breakthrough tech catalyst with Starlink.
Validating their strategy, giving them a unique selling point.
Versus profound financial distress, huge execution risk for management, and that ticking clock on the Nasdaq compliance.
Yeah. And the overall investment thesis we pulled from the sources really reflects that tension. It's rated, interestingly, as bullish 8 out of 10.
8 out of 10. That seems high given the risks.
It does, but it's heavily caveated, heavily weighted by those risks we just spent time detailing.
So breaking it down for the short-term trader?
For the short-term momentum trader, it looks like an excellent setup, potentially. You're looking for gains around the volatility of that November 4th earnings call, any further Starlink news. It's a pure speculative volatility play, really. High speed, high risk.
But for someone looking longer term, beyond a few weeks or months?
Yeah, if you're looking 12, 24, 36 months out, this is only suitable for really aggressive, high-risk tolerance portfolios. You have to be willing to bet on management's ability to execute a full, radical turnaround.
And successfully scale these new technologies, especially Starlink integration, while fixing the core financial problems.
Exactly. It's a very high-stakes wager on execution.
So I guess the ultimate question for you, the listener, to think about isn't just whether Starlink is a big deal for them. It clearly is potentially significant.
Right.
But it's whether any tech catalyst, no matter how exciting, can actually outrun the harsh reality of negative cash flow, high debt, and that ever-present delisting risk. That balance, that tension between innovation and solvency, that's really the decision you have to weigh.